West Asia's market champion. Since the October 7, 2023 attack on Israel, the best performing major stock market in the world is Israel. After taking an initial hit, the market has fully recovered in 4 weeks, and since then is up around 80% in dollar terms. This ascent continued through the recent 12-day war with Iran, when most geopolitical experts thought their worst fears of a wider West Asian conflict were coming to pass. The stock market, in contrast, kept signaling that the conflict would end soon, with Israel prevailing both militarily and economically. That message came through loud and clear in forward looking price to earning ratio, which have risen over the last 21 months by 40% compared with 20% in the rest of the world, and a slight decline in neighboring market of the Gulf led by Saudi Arabia and UAE. Despite the international criticism that has been raining down on Israel for its multiple military offensives since October 7, from Gaza to Syria and Iran, a surge in market buying has been fueling the rally in its stock market. Founded amidst poverty and chaotic waves of immigration after World War II, Israel is one of the few countries to have risen out of the developing and into the developed ranks. Out of Out of roughly 200 nations in the world, around 40 are classified by IMF as developed economies. Even fewer are classified as developed financial markets by leading the global index provider MSCI. The Israel the Israel Israel is the only country in West Asia to have passed either of those development milestones and the only one anywhere to have made the transitions on both fronts. Its $550 billion economy is now among the world's 30 largest. So Israel's economic success has been decades in the market, and despite a rocky and clumsy start, most of its founders were committed socialists. They began building a uniquely expansive welfare state, in that it included large subsidies and incentives for new migrants. But that generosity, along with costly wars, led to financial crisis by 1980s. It is an echo of the story unfolding around that time in the socialist states of the Scandinavia. The crisis forced economic reform. Israel made a sharp turn towards capitalism and greater fiscal discipline. State-owned companies were sold, taxes were first streamlined and later cut, and borders were opened to trade. Since the early 2000s, as most other developed governments have increased spending and debt, Israel has cut state spending from 50% to 40% of GDP, and public debt from a high of 90% to under 70% of GDP. Its government also made some smart investments, seeding the venture capital industry that helped to launch the nation's want, wanted tech sector. Perhaps the most telling sign of its dynamism is that Israel now spends more than 6% of its GDP on research and development, more than any other nation and over double the global average. An unusually high share, about half of that of R&D fundings come from foreign multinationals, many of which are invested in defense related industries. Their work created perhaps the most famously known Iron Dome and a related web of interceptor rockets that have reportedly destroyed more than 85% of the missiles and an even larger share of the drones launched at Israel in recent conflicts. Spillovers from defense research have made Israel a global leader in fields from air traffic control to mobile security network and above all cybersecurity. Mobile phone network, sorry. With more startups per head than any other country, its business culture is closer to that of California than West Asia. Despite lacking the scale and funding of larger rivals, Israel ranks top 3 in the world on many measures of powers in AI. including concentration of talent and number of startups in the hot field of generative AI, more than 90. More than 70. Half of Israel's exports are tech products. A few advanced economies can match, and that strength has helped it run a current account surplus every year for the last 2 decades. Meanwhile, its neighbors still export mainly oil, an old-fashioned commodity. The result is an isolated productivity miracle, total factor productivity, which captures how well labor is using new machines, has grown 4 times faster in the new Israel than in developed economies over the past 25 years. And that gap has widened in the past 5 years. In tech driven Israel, GDP per head was nearly tripled since 2000 to more than $55,000, rising from 50 to 70% of that of the US level. In petrostates and not only of those of West Asia, incomes tend to rise, fall, and ultimately stagnate with the long term price of oil. Saudi Arabia's per head GDP is that of the third of USA, roughly the same as it was 25 years ago. To many observers, the situation in West Asia still seems precarious. Military inflammation, militarily flammable, and diplomatically tense, with Israel's role as controversial as ever. But the market's optimistic take on Israel's tech driven economy is now showing up in economists' forecasts, which are projecting growth of 4% in coming years. That's relatively strong for a developed nation. It validates the market view that Israel is cementing its status as the religion's dominant economic force.